latest SaaS stories. I'm joined by Will Banks, co-founder of DayTek Capital. Will is a man on a mission. He's out to change the world of banking. Welcome, Will.
Thanks for having me.
Lovely to have you right before Christmas. And thank you for sharing the stories that you're about to share with us. I'll kick off with my first question, and that's, tell me a little bit about yourself and how you came up with the idea for Infinity.
Yeah. So, I mean, first of all, about Infinity. So we looked at neobanks globally. We noticed that most neobanks and their propositions were pretty much based upon their technology. So the shiny buttons, the app, and that was really the differential between them and the traditional banks. And we feel that banking is really all about the products and services. So therefore, our product proposition is about products and services. So we're focusing on unique deposits, a unique type of loans, not only the way that they are operated and constructed, but also by the way that they interact with customers. So we believe that the technology is important in the sense of underpinning what we're doing, but it doesn't drive what we're doing. It's the products and services. So even though we're kind of very innovative, we're engaging artificial intelligence, I guess we're kind of taking banking a little bit back to basics. So that's kind of where we came up with the idea. And we see this on a global level as well. It's not just within Australia, we see it globally. In terms of my background, I've been in banking for 2 decades, troubleshooting banks, and for the last decade, building regulated businesses. I've worked for investment banks, retail banks, markets, capital markets, trading.
So you know a thing or two about banks.
A little bit. And because of my background, I was granted permanent residency with my family to Australia in an unprecedented just over 2.5 weeks, about a year ago. And we landed here during COVID in May. So far we're living the dream.
Yeah, definitely a good place to be during COVID, huh?
Yeah, absolutely. So completely agree. So, so I feel very privileged to be here. And like I said, I've got a background in banking, so I've seen a lot of things that have worked globally, things that have worked very well, things that have not worked so well. So we're kind of taking a lot of those ideas and concepts, consolidating them, plus adding some very unique ideas as well. And that's what we're looking to create Infinity.
Yeah, no, brilliant. It sounds like you're taking a much more customer-centric approach. You're looking at the products and services. I just recently watched an interview with Elon Musk, who said, businesses will do a lot better if the people can focus on the product rather than the PowerPoint presentation to the board. So yeah, no, I'm sure your focus is on the right place. I'm sure you'll have really good success with that.
Yeah, and I mean, what is important to us as well is it is about the products, but also it's very much about creating an intimate relationship with each and every single customer.
An experience.
It's an experience, but it's also the products that we will be launching will be dynamic. So that's why there'll be this intimate relationship that each and every product will be specifically tailored to every single customer, whether or not that be SME and retail space, and they're the 2 areas that we're going to hit from day one. And even when those products have been executed, those products will continue to evolve to reflect the changing financial well-being of each and every customer.
That sounds exciting. And just coming back to the traditional world of banking, what can you tell us about the current state of it and the improvements, like specific improvements that consumers need to see in the future?
So, I mean, the neobank phenomenon, I mean, it started really outside Australia about a decade ago. And really, I would say that the UK and the USA were kind of leading that. And that was with the launch of, for example, Metro Bank and Moban Bank. Yeah. And this was driven by the regulator lowering the requirements in terms of regulatory requirements, therefore making it easier for banks to become authorized and therefore launch. And because of this, it then started spreading across Europe, and now you can see these neobanks as a global phenomenon. So they look at very much on a positive culture. They look at kind of niche offerings, simple user interface is very pleasant and simple to use, and they very much kind of leverage developing technology where it's easy to deploy, easy to onboard, so they haven't got legacy systems. So I would say the neobanks are very much engaging with what customers want, and making life easier for them to onboard, and generally just to be able to interface with their bank and perform banking services really. So that's the main thing. I'd say that the neobanks are winning customers over, and you've seen this a lot more in Europe. In Australia, it's a much newer concept. So, but they're still winning customers over by creating more competition, by creating more customer options, much faster onboarding. So to give you an example, HSBC, it's 124 clicks to onboard a customer, whereas Revolut, I think it's about 27. They're pushing technological capabilities, and the UIs and the add-ons are much nicer. So if you look at Upbank in Australia, for example, their user interface is very pleasant, and customers like using that. And I think also the artificial intelligence is also improving customer experience, where it's not just a kind of a static offering. It listens and evolves around how customers behave and what their needs are. So I think that's another part of it. Within the neobank space, there is also, as I said earlier, there are these niche offerings, and some banks are just very much playing across the board, keep it pretty generic. And then you've got some of them which are very focused on specific sort of sectors, customer base. So if you look at things like Oak North is playing within the entrepreneurial space, and they are actually looking to expand out from the UK to Australia. So it'd be interesting.
Okay.
If you look at the deposit market, Sainsbury's Bank, which is one of the supermarket banks in the UK, and Zinja, which obviously their news today is it's very sad to hear that, but they focus very much on the deposit space, and also Volt as well, which are yet to launch a deposit, but that's where they're focusing. And then you look at things like the retail loan market, Secure Trust, Atom Bank, Alex Bank, for example. They're looking at the retail loans, sort of personal loans. And then you look at things like branches. You've got Metro Bank, you've got mortgage market specialists, SME market, again, Judo, for example, Penta out of Germany, Toshka out of Russia. And then you look at the current account. So those banks are looking very much at the current account proposition. So Starling, UK, number 26 out of Germany, Up out of Australia. And then you've got the credit card market, such as Tandem and Archer out of Australia. And then you've got the private banking. So Handon and Co. There's really only been one neobank that's kind of broken into the private banking space.
Yeah.
So I'd say that's kind of where we are, I think, very quickly on a global footing and why we got there to a certain extent.
Okay, so it sounds like a lot of the banks now, neobanks, are kind of niching and wanting to become experts and specialists in specific areas and segments, which is always a good thing. You mentioned AI, you mentioned some other features. I know, looking at the history of crises and pandemics, and what we find is that there's a lot of disruption that happens specifically after those periods. So what do you see in this world, in this industry, as some of the disruptions you expect to see, say, even over just the next few months?
I think there'll be quite a lot of changes. I think short term, and then over to the next 2 to 10 years, and I think they'll just extrapolate out. At the moment, the awareness of neobanks remains low, with only 67, I think it was about 67% of people actually saying that they'd could even name a neobank within Australia, for example. So if you look at the Australian market, and I think this will change. I think this will the exposure will increase. I think there'll be more neobanks launching into the market, or kind of neobank derivatives. So what I mean by that is Upbank, because Upbank hasn't actually got an ADI. It essentially sits on the top of Bendigo Bank. So I think there'll be more exposure on that. I think you'll find globally, but again specifically Australia, I think you'll find that Australians will become more comfortable with neobanks, and again with more of the online banking, digital banking. So I mean, it's traditional that when you want to do banking, you walk into a branch, and I think that individuals will become more accepting that actually you don't need to do that, and you can do online banking or telephone banking, for example. So I think that will become more popular and more accepting. I think that the AI will further integrate within the banking space. I think that's becoming more and more important. Sort of the machine learning, one product fits all, I think will land up disappearing. And I think that will continue to grow. I think in the next couple of months, I think COVID has very much had an impact on banking, not just from a sense of financial position, but I think that more Australians, for example, and again globally, are working from home, and I think they'll continue to do so. And therefore, I think that you'll find that the demand for online services will increase, and the fact that people want to be able to access their banking services from anywhere. So that demand will increase as well. So I think short term that will happen. It's happening already, and I think that will happen even more. I think that you'll find that the acceptance of having more than one bank account will also increase. It's one of the things I get asked when I'm presenting and giving keynote speeches at some of the events here is that, how are you going to get Australians to move from their big four institutional bank to you? And I'm saying, well, who wants to get them to move? I mean, it's a high probability that they'll still keep that account for certain services and use us for other services. So I think that kind of attitude will change as well. I think that those neobanks that have launched, I think there's an opportunity for them to grow. Even now, they've got a much lower cost to income ratio, which has helped them during COVID. And the digital bank, they've shown that it's a successful model, especially during COVID. And I know that 82% of Australians, for example, under the age of 55, are prepared to consider using a neobank for at least one product. And I think that will increase in terms of the number of products and the number of people and the age group that will be prepared to use the neobanks. And I think the other point is, I think you'll find that at the moment, it's the neobanks within Australia, for example, that have launched here. And I think you'll find that as with Europe, where you've had, for example, mBank growing out of Poland and spreading across Europe, and same with number 26, for example, I think you'll find that they will spread also across into Europe. So already you've got Revolut landed in Australia. Like I said, Oak North is looking to land as well. So I think you'll find short term and long term that neobanks from outside Australia will land, but also look to try and take market share. Open banking, I think that will gain more traction. There's a number of businesses launching around improving that process. And again, I think the attitude towards open banking will become more trusted. I think that at the moment, if you want to switch from one account to another bank account, so I don't know, a Westpac or a CBA and switch to, let's say, Judo or whatever, the current account switching service is still not particularly feasible to make that process smooth. I've been trying to get traction and lobbying government on a federal level and actually on a state level, which sadly without any success. But I think until that gets sorted, that process is not really fit for purpose because there isn't even a redirection service in place.
Yeah.
I mean, lots of change. I mean, MPP, that process needs to improve as well, and more players need to be involved in that process. It is fairly still dominated still by the big four. I think gamification will improve. I think that will be included more within banking services. You've seen a lot of that within Europe, not just within banking, but also within other financial service businesses such as brokerage.
Yeah.
And finally, I think ASIC and APRA will become more sophisticated in this space. So I think already, I know that the ADI requirements are being reviewed at the moment to make some changes to avoid situations such as what's happened with Zindra at the moment.
Yeah.
So how's that list?
Wow. That's quite a good and extensive list. No, I'm really looking forward to that. And look, like you said, Australia may be a little bit behind. I think, everyone jokes that Australia is 5 years behind the rest of the world, but we do end up catching up. I think COVID would have a good impact because if there's anything, a crisis like a pandemic does, is it makes us better, adaptable to change. So if there ever was a time for us to decide, you know what, I'm actually not loyal to my big four banks, they make it incredibly difficult to go overseas and access my money, amongst other things. I think, next year or 2021 would be a good year for that kind of mentality. So yeah, I'm looking forward to that.
I mean, just picking up on your point around Australia being about 5 years behind. I mean, in terms of banking, I would say they're probably 8 to 10 years behind.
Oops.
Right. So I'd say, but having said that, though, I don't mean that in a derogatory sense. I mean, my spin on it is that I think that Australia kind of sits back, lets everyone else screw it up, and then they come in and go, well, this is how it's really done. And I think, quite often, I know from the UK, Australia is used quite often as a template and say, many things to say, well, even the way that COVID's been handled, immigration, lots of things to say, well, actually, this is how Australia do it. And most people in the UK I take the opinion, and I certainly do, that actually this is the way it should be done. So I look at the 8 to 10 years behind as not being something that's derogatory or detrimental. I look at it as huge opportunity, and I'm just very pleased and grateful to be part of that we can start moving it forward. And I'm pretty certain that some of these businesses coming out of Australia will become world class and will be the templates globally of how you are to build financial service businesses. So and actually looking at even at the regulator as well, taking the PRA and the FCA 10 years ago, they had to go for a steep learning curve. And I think that the way that ASIC and APRA have conducted themselves at this early stage of neobanks, I think is extremely well. And certainly the way they conduct themselves through COVID, I think that's been to be congratulated on as well. So, so Australia is behind, but it will catch up. And I think also it's a good point you raise around, customers. I think they won't be forgiving. I think if once COVID passes, and it will pass, I think there will be a review of individuals' banking services and products that they've got with their existing banks, especially if they've not been supported either individual or their businesses. So I think that some of these banks, I think they do need to be a little bit careful that they don't become too flippant. I know in the UK, many of the banks there, when the neobank phenomenon was launching, they didn't really think it would have an impact, and it did. And that's why now many of them have actually even invested into the neobanks, because they realize they can't change their ship around that quickly because it's too big and cumbersome. Whereas to hedge their bets, they're investing in the neobanks now.
Yeah. Oh, brilliant. Looking forward to that happening in Australia. And I really love your example about Australia. We kind of sit back, let the rest of the world screw up, and then do it better. It's an example I use with a lot of SaaS startups that I talk to. I say, it's not about being first to market, it's about being best to market. And that's when you truly have the most success.
Absolutely. Absolutely right. Absolutely right.
So with that in mind, can you tell us anything about Infinity's future and your one key objective for the next 5 years?
I guess the key objective, there are actually two, but they're combined, if I'm allowed to do it that way. So the key objective is to serve customers through innovation, product and service innovation. So our view is you haven't actually got a bank unless you have customers. And therefore, to keep customers, you need to serve them properly.
Yeah.
And that is through innovation of products and services, which will be underpinned by innovation of technology. So our plan is to launch on a stage-by-stage basis, matching our regulatory approvals with our product launches. That will initially be on an Australia-wide footing, and then to look at global expansion, which we've already got foundations in place to start submitting regulatory licenses into some of the other regulators, such as the UK. But it will still be an Australian business, Australian bank through and through, with the ethos and the culture of Australia.
Yeah.
So that's kind of our main goal. And also, we want to listen to customers. So rather than customers just not being happy and just leaving, for example, we want to know what they're not happy about, because again, it's all about products and services, and we can't improve them unless we know how to improve them. So we think we've got it right so far in terms of what we're looking to launch, but we need to get feedback, which we'll be seeking on a regular basis.
Have an open mind as well, which is brilliant.
Absolutely right. Absolutely right.
Yeah. No, I absolutely agree with customer needs to be, the number one approach. I think I saw a very interesting statistic. If companies were just to focus on, if companies were to focus on their customers, just reducing customer churn by 5% can actually have a 95% positive effect on your ROI. So it's your absolute, it should be your absolute number one goal. So happy to hear.
And I think this is where some of the banks have got it wrong. Actually, some of these neobanks, they believe that they seem to look at two metrics. They look at customer acquisition and valuation, and that's how they define success. So they look at how many customers are onboarded, multiplied that by a certain number, and that's their valuation. Whereas my view is it is not about customer acquisition, it's about customer retention.
Yeah.
And it is also about net interest margin. So you can give anything away for free. You don't have a successful restaurant just because you fill it up with people because you're giving away free food. Getting customers to come back and eat in that restaurant is because you've provided a good service and good food. And banking is the same. Is you are keeping those customers because you're listening to them, you're providing them with products and services that they want. You are taking on board things like the Royal Commission, and we're actually taking some of those points out of the Royal Commission and taking it to another level. And the valuation is based upon, for investors, keeping them happy, is the fact that you're actually breaking even or making a profit, at least making a profit. So they are the fundamentals for us to say, are we successful? We're successful by serving our customers and by serving our investors.
Yeah, and from a marketing and scaling point of view, if your customers are happy, they're going to be your biggest advocates. They're going to tell all their friends or their colleagues.
Exactly.
That's how people come on board. So, yeah.
Exactly right.
And so, what can the everyday consumer or customer do right now to help you kind of launch this initiative?
Follow us.
Follow us on LinkedIn.
Yeah. We're on LinkedIn.
Social?
We're on social media. We're on LinkedIn. We're on Twitter. We're on Instagram. Got a website which is, you can sign up to that as well. www.daytekcapital.com.au. So DayTek Capital, just for clarity, is the company that will own the bank. The bank will be Infinity Bank. That's current thinking. So at the moment is watch this space, watch what we're doing, follow us. We are closing our funding round at the moment, and we hope to be launching our first stage, which will be a prepaid card, FX, white label, etc., within 4 to 6 months. So once that's launched, and obviously if you're following us, you'll know it's launched, is then engage in the bank. Take one of the cards, engage in the products and the services, provide us with feedback. Reach out to us if you have an idea, or you want something changed, or we've got something that's missing, or we've got something wrong. So really to help us is to fully engage.
Yeah. And I suppose educate themselves on the differences as well, because I think a lot of people are still kind of struggling with that traditional mindset.
Absolutely, and also it's not just about the products and services. Actually, it's also about the markets that we're looking at serving. So we're about, as I say, innovative products and services means that you're looking also at the sectors. So we're looking at the strata space. We're even looking at the indigenous population, where at the moment they've been pretty much forgotten about when it comes to financial services. There's a lot less education around what educational material that they can engage with when they're looking, for example, to execute a loan.
Yeah.
So we're actually working with a number of indigenous people, leaders in First Nations. So we're looking at even potentially offering them services to try and support them.
Brilliant.
So if there's any sectors that we feel that we're missing, again, reach out, let us know.
Perfect. And coming back to, the fact that, yes, you are a startup, even though you're about to change the world of banking, I suppose for our startup listeners today, what can you tell us about the biggest challenges of running a startup and getting to that go-to-market phase?
The biggest challenges is, I guess it's kind of, what does it mean to be, I guess, an entrepreneur as well, to a certain extent. I mean, I guess some of the biggest challenges are you've got to be adaptable, self-belief. In fact, I would probably say the key word is courage.
Courage.
You've got to be, because we're not being paid at the moment, so you've got to believe in what you're doing. You've got to take a risk. There's no space really for egos. 1 minute you'll be making the tea for one, the other minute you'll be sitting in front of an investor. I'd say probably the biggest challenges are probably funding.
Yeah.
A lot of the other things you can do, you can probably control to a certain extent. Funding you can't, and you've got to spend a huge amount of time, and you've got to kiss a lot of frogs to find the right investors. So I'd say that's probably one of the hardest challenges, and you can't just give up after a couple of weeks of trying to find funding. I mean, I've heard of neobanks taking years to find funding. So it's a lot of self-belief, a lot of courage. You've got to be adaptable in terms of 1 minute you might be doing one job in terms of I don't know, working out the forecasting for the financials, and then the next minute you might be writing policy documents on training for staff. So you've just got to be very adaptable.
Wear multiple hats.
Yeah, and you've got to be engaging, I think, with individuals, with the market, bringing the market along the journey with you. And I think particularly with COVID, that has had an effect on funding. So I'd say that's probably one of the biggest challenges actually, is funding. And I mean, even going back to Zinja, one of the reasons why they've collapsed is because they couldn't get their funding through due to COVID.
Yeah. Okay. No, I 100% agree with you. I think your mindset, your courage, your passion for what you're doing is definitely going to keep you in there for the long game. And that's kind of what you need. You need to go through that process in order to find success. I think not many actually, but I do come across the occasional startups where they're thinking, I'm just going to build this product because I've seen a gap in the market, but they don't actually do the work on talking to the customers, to seeing how can I build this so that it's customer centric and customers love it. And also I think, when it comes to investing, I definitely hear that as a challenge a lot amongst a lot of them. They don't know how to go about it. I think the biggest issue is their pitch as well. They're not very aware of how to pitch their products. I mean, it's all in their heads, and in their heads it sounds great, but then kind of pitching it is definitely a challenge.
Oh yeah, and I think you've got to listen to feedback as well, but also the difficulty is, I mean, it's a balance. It comes with experience. You've got to listen to feedback, but having said that, you put a pitch deck together and you share it in front of 100 people, you'll get 100 different reactions to it.
Yeah.
So I've seen. I mean, I'm on the board of. I've been on the board of Roehampton University in London, helped build their business school. I'm currently an executive advisor at QUT, and also expert in residence at Griffith. And I see a lot of pitches, and I see a lot of business plans and IMs and other bits and pieces. So it's you've got to listen to it and find out. I guess you've got to weight the level of what they're telling you as being something that you might want to adjust. So if you landed up adjusting your pitches and your IMs and everything else to every single reaction, I mean, the IM and the pitch would probably go on for about 3 days. So you have to kind of be quite selective, but at the same time, you can't be arrogant and think, I've got it right, that's it, I'm not listening.
Yeah.
So there is a little bit of a balance on that.
Okay. No, wonderful points for startup founders to keep in mind. Any other advice they should be aware of?
You probably have to realize that, you come up with an idea. Most people that have been successful, they've been probably chasing that idea for quite a long time.
Yeah.
They'll never tell you about the ones that have failed. They'll never tell you about the mistakes. So when you see some of these startups launching, you think, wow, it's amazing. They've been doing this for a couple of months. They've got funding. They've launched. When in reality, they'll tell you what you want to hear. So you don't know that actually there might have been something they've been chasing for 2 years. You might find that the funding that they've received has come through a channel where it's a close family member, which again, that's obviously much easier to raise that than if you're going completely independently out. And I guess don't be scared of the failures. Just learn by them. I mean, I've been involved in loads of startups, loads of ideas that haven't gone anywhere, or nearly gone somewhere but haven't, or those that have gone somewhere, and seen a lot that hadn't. So it's difficult. It's not for everybody. Also, if you're on a job that's a 9 to 5 and you think you're just going to step in and build a business that's 9 to 5, it's not. It's 8 days a week, 36 hours a day, 900 days of the year that you're working on it.
Yeah.
And it's
you're dreaming about it.
Correct. So it's not for everybody, and many are not successful. So it's always worth going into that with your eyes open and realizing that's the case.
Yeah. No, that's absolutely true. And I like what you said about, obviously failures. I like to define failure as only happening if you give up rather than keep learning from it and, keep going. And absolutely be open to that feedback and learnings that you've gained.
And the other things as well, actually, just on a more of a kind of a specific point, is when you're looking to raise funding, you've got to be flexible on the equity. I know people that have come up with an idea. They think that the idea is, best thing since sliced bread. They're only prepared to give a tiny amount of equity. They're very aggressive about it, won't listen to anything else, and they land up never getting investment.
Yeah.
Or the other one is it's good to be protective over your IP, but those people you're pitching it to, and it's fine to put an NDA in place, they've got to understand what it is. And I know other people that have been very, very cautious and protective over what the IP is. And because of that, they're unable to explain to the investor exactly what the proposition is, because they feel they're going to steal it. And therefore it means that the investor never gets the idea. And again, they won't invest. So they're kind of two things. I mean, bear in mind, I say that, I've said that funding is probably one of the tricky ones at the moment. They are two of the things that are critical, is the level of equity and making sure the investor gets the proposition.
Yeah. No, absolutely. I do come across the occasional ones that are kind of a little bit paranoid about, stealing the ideas. And to them, I say, look, other people haven't thought about it for the number of years that you have. They don't have, that knowledge, that expertise, that there's so much that goes into it. It's so hard to just steal an idea, right? You can't just, you'd have to build it. You'd have to market it. You'd have to kind of be passionate about it. And I think only the person that, it kind of resides in is the one that's going to have success with it. So I always say don't worry about people stealing your ideas.
And also, I mean, you're kind of damned if you do, damned if you don't. If you don't explain it, you won't get the investment, so you won't build it.
Yeah.
And if you do disclose it, they could take it, but then that's the risk you've got to take, really. So and therefore you might not get the investment. So I guess it's giving them enough information that they're able to get the proposition and invest.
Yeah.
but also you've got to have conviction in your own capabilities, the sense that just because you get the idea doesn't mean necessarily they're able to build it.
Exactly. Yeah.
Because at the end of the day, you've got to think about, if they're going to build it, they would still need to pay somebody to build it or invest in that business itself. So I think you've got to have a certain level of trust, but also, put an NDA in place. But I think you've also got to have a level of trust.
Yeah, absolutely. Well, thank you so much for talking to me and sharing your stories. It's been so wonderful to hear about what we're going to expect in the future from neobanks, and what's going to happen in Australia as well. I do have one last question for you.
Yep.
I love asking this question. It's not related to the banking industry at all, but just mainly for you. What gets you out of bed in the morning and what inspires you?
Probably the dog, actually, because he's whining at the bottom of the stairs, wanting to go for a walk at 4:30 in the morning.
That is quite early, yes.
Yeah, so that's the one that is kind of my alarm clock.
Yeah.
That does wake me up. I guess it's innovation, it's being creative. I think if you're building businesses and you're doing things like that, it's all about being creative. It's all about making a difference and stuff like that. So it's I guess that's what it is really. They're the main things that get me up in the morning, and having fun.
Absolutely, you can't do it without fun.
Yeah. Sorry, I've got people in view now.
That's all right. We're pretty much wrapped up, but I'll stop recording now. We can just continue chatting. But